It is day 10 of the war in the Middle East, and there are no signs of the conflict ending anytime soon. What began as a confrontation between US, Israel, and Iran is now sending shockwaves across global markets, and India is feeling the heat as well. The biggest impact is being seen on the Dalal Strait, where investors are reacting sharply to rising geopolitical tensions, fears of higher oil prices, and also global uncertainty. Over the past week, the Indian stock market has been extremely volatile, with massive swings amongst every trading session. So let's look at how markets have reacted day by day from the time this war actually began. On March 2nd, the first trading day after US and Israel struck Iran, the Sensex plunged over 1,000 points while the Nifty fell over 300 points. The sell-off continued on March 4th. Sensex dropped another 1,100 points there. Nifty again sliding approximately 400 points over there. There was a brief recovery that we saw on 5th of March, and then reports suggesting that conflict could ease down a bit. The Sensex, on that sentiment, rebounded by 900 points, and the Nifty gained again about 285 points. But the relief was short-lived. On 6th of March, the Sensex again fell by about 1,000 points, while the Nifty dropped about 315 points, and the pressure has only increased with the start of a new week. Today, the Sensex crashed to 1,353 points, while the Nifty tumbled 422. So what exactly does this mean for the broader market since the war began? Now, before the war began, the Sensex was at 81,287. Today, it's fallen to 77,566, a drop of 4.58% almost. The Nifty tells a very similar story. It has slipped from 25,000 to about 24, the decline of about 4.57%. The war has also wiped out massive investor wealth in just a few trading sessions. On the 2nd of March, nearly 7 lakh crore rupees of investor wealth was wiped out from the markets. The loss grew even bigger on March 4th, when around 10 lakh crore rupees were erased in a single trading session, and the selling pressure continued on 6th of March with another 3 lakh crore rupees wiped out from the investor wealth. In just a matter of days, lakhs of crores in market value have vanished, highlighting how global conflicts can rapidly shake financial markets globally and also here in India, largely shaking investor confidence. In other words, the ongoing conflict is directly bleeding out and bleeding into financial markets, wiping out investor wealth and raising concerns about what happens if the war drags on. All right. So the biggest trigger, like we told you, behind the slump in Indian stock market right now is the sharp rise in crude oil prices. And why are oil prices hitting a 2-year high? Because one of the world's most critical oil routes, the Strait of Hormuz, remains heavily disrupted. Continuous attacks and rising tensions in the Gulf have choked the entire shipping traffic through the strait, forcing several oil firms in the region to halt or slow down crude supplies. With a large portion of global oil shipments now passing through this narrow corridor, any disruption immediately sends prices soaring. How exactly? Check out in this report.
Oil markets are exploding. Prices surging like a pressure valve suddenly blown open. And today, the spike became historic. Brent crude, the global benchmark, surged to $119.50 a barrel. A dramatic leap after last week's 28% rally. In just 3 months, crude oil prices have doubled. In the United States, West Texas Intermediate jumped more than 30% in a single trading session. The reason? War, supply shocks, and one of the world's most critical energy arteries now under threat. The surge began when the US and Israeli strikes hit multiple Iranian oil depots, sending plumes of black smoke over Tehran. Those attacks were followed by Iranian strikes on energy infrastructure across the region. Refineries, storage facilities, shipping routes. The world's oil network suddenly under fire. Markets reacted instantly with prices erupting. This chart tells the story best. 3 months ago, Brent crude was hovering below $60 a barrel. Then the conflict erupted and prices climbed faster, higher until today's spike. Brent crude touching $119.50, just a few drops away from its all-time highs. The danger is now beyond just the Strait of Hormuz. Adding to the uncertainty, Iran has hardened its political stance. The country has named Mujtaba Khamenei, the son of Ayatollah Ali Khamenei, as its new supreme leader. It's a clear signal that hardliners remain firmly in control and that the conflict could stretch far longer than markets hoped. US President Donald Trump brushed off this price spike, calling higher oil prices a small price to pay for global safety, defending the aggression and claiming the prices will fall soon. But traders clearly disagree. The surge has already shaken global markets. Stock futures in the United States plunged. Asian markets suffered unprecedented tumbles. And economists are warning that if prices stay high, the world could face another wave of inflation and slower growth. For India, the world's third largest oil importer, the shock could be particularly painful. India imports more than 85% of its crude oil, which means every dollar rise in oil prices directly hits the economy. The price of the Indian crude basket, a mix of several imported crude varieties, has shot up in March. From around $68 a barrel in April last year to a low of $62 in December, the $99 level on Friday was before Monday's spike. Higher crude means more expensive petrol and diesel, pressure on the rupee, and rising inflation. And that's not all. There is also a rising spectre of shortages, all set to add fuel to the inflation fire. Indian oil companies have already seen their shares tumble as crude surged. The big question now, how long will this last? Analysts warn that if the war continues, oil supplies could remain disrupted for weeks or even months. Some forecasts even warn of a crude bomb, prices climbing to $150 or $200 a barrel if the squeeze continues. Bureau Report, Business Today TV.